we do the things. Very, very important, very critical. I'm telling you, every other, if you have 10 requirements, 7 requirements will have this concept. IFRS 18 financial statement. This is going to be introduced again. I'm saying it is from the 27th of January. Okay, January, and they have started assessing this. What it says, it is a completely presentation is different. That's all. The statement financial performance reflect it is profit and loss account and OCI. The statement can be presented. Either you can present a one combined statement, or you are with both profit and loss account and OCI, or you can submit a profit and loss and a separate OCI. We are not supposed to, unless until this will be there, where this will be there in the section A, question number 1. They will give you something with respect to the spreadsheet. In the spreadsheet also, either they will give you statement of profit and loss, statement of financial position, or statement of cash flow. This I am very specific. This will be there for almost 12 marks. Compulsory they will give a spreadsheet. Okay, compulsory they will give a spreadsheet.
Can you repeat it?
Huh?
Can you repeat again, doctor?
In the section A, is it right? In the section A. Section A, you will have one question for 30 marks. Question number 1. In the question number 1, you will have 1, 2, 3 questions. 1, 2, 3, 4 questions will be there. And one question will be there on the spreadsheet. Excel they will give you. They will give you an Excel. They will give you a draft spreadsheet, and we have to make a corrected one. Is it? Either they will give you a profit and loss account, they will give you a financial position, or they will give you a cash flow. Either any one they will give. Okay, any one they will give, and you have to do this. Okay, this much is important, and we have to mention. And apart from that, every question we will have to mention whether it will be in, if it is in the statement of profit and loss, then we have to mention very clearly whether it should be in the operating section. It is not activity. It is in operating section, or it is in the financing section, or it is in the investing section. Not, don't get confused with respect to the things. Okay, very, very specific. Nothing is there. Any interest received, any interest paid, will show in the financing section.
This is operating, financing, and investing. It's related to cash flow statement, right?
There we are using, I know, you will ask me the same thing, I know. There we will use the activities.
Oh, okay.
There we will use the operating activities, investing activities, financing activities. Here we are using the section, not activities.
Yeah.
Are you clear about this?
Yes, now it's clear.
Okay, there we are using the activities, is it? We are using the section here. Is it? Now, statement of profit. If we can show it in separate, we can show it separately, one combined statement. Don't say that OCI is different, statement of profit and loss account. These are the initially, you will have all these doubts. People say that why OCI? No, OCI is only the non-trading. We will show in OCI. Trading we will show in the profit and loss account. And that makes a good difference. Okay, every chapter, every standard will have this. IFRS states specific presentation requirements for the statement of profit and loss. We are talking about the classification of income expenses, subtotals and totals, and presentation of the operating expenses. We are very specific. This is the difference. It is there previously and now. What you have studied previously, it is completely different what you are studying now. The income expenses recognized in the statement of profit and loss account is in 5 different categories. Operating section, investing section, financing section, income taxes, or discontinued operations. When we are talking about discontinued operation, it is IFRS 5. Okay, IFR. The majority of expenses will need to be classified in the first 3 categories. Okay, the majority is going to be the first 3 categories. Items found within the taxes discontinued operation is very relatively easy. Don't worry about that. Okay, we are not giving that much importance also. Okay, now see, this is the one key. Okay, this is the techniques in SBR exam. When explaining reporting treatment transaction, you will need to specify which section of the statement of profit and loss related. You have to specify. Again, I am saying this. Is it right? If you specify this, it makes the real impact when you are presented in. Understand point?
Yes, doctor.
Okay, when you are presented. Fine. Now, this is theoretical. Now, when you are talking about the things, they are mentioned very specific. This is first time you are doing this, and it is the core. Theory is very important. Calculations is very simple. Assuming main business activities of the entity are not performing investment and financing activities. Typically, IFRS 18 classification income expenses under 3 main headings: operating, anything not classified investing, main business activities. What will be there in the operating? Main business activities. Revenue, sales, depreciation, amortization, current and past service costs. This we are going to cover in the defined. This we will cover in IAS 19, employee benefits. Is that employee benefits? Investing section. Okay, any investments are there, any cash and cash equivalent, any return on assets that generate income. Is that any unconsolidated subsidiaries? Okay, those will be in the investing section. Again, once when you are revising it, wherever I am putting a star mark, revise it 2 times. Is that interest income, dividends, rental income, income expenses from any financial assets? Is that fair value through profit and loss account, FAPL, fair value through profit and loss account from financial assets. If you are doing this, you have to take into an investing section. What is the financing section? Liabilities from transactions rising from the financial liabilities. Raising finance, interest expenses, interest on borrowings, interest on lease payments. Is that this comes in where it comes in IFRS 16, leasing. Okay, IFRS 16, it comes in lease. Unwinding of discount provisions, interest cost on pension liabilities. Is that these are going to be liabilities from transaction, do not involve raising of finance. What are the things? Pensions, provisions, and leases. Are you clear? These are the most important thing. Okay, you have to mention. If you understand these rules, you can do your question answers very independently, because every question will have some amount with respect to the statement of profit and loss, and we have to mention. We cannot say that what is the usually what we'll say, it has to be charged. Okay, we'll say it has to be charged to profit and loss. Is it? It has to be charged to profit and loss. Now we should not say like this. We should not say like this. This is the old version. I am talking about this. What is the new version? New version is it has to be charged to, is it, investing section. Is it investing section, or it has to be charged to operating section. It has to be charged. It has to be shown. It has to be charged or shown. It has to be shown in the charge to the financing section. You have to mention this.
So we have to specify which section exactly is said with the profit or loss.
Yes, exactly. That is compulsory requirement. There is no other option for that. Is it easy by doing? You can see we have so knowledgeable, so awareness about these things. It is not difficult. Okay. Only thing is you have to mention. You should not simply mention that it should be charged to profit and loss account. Okay, note that the interest expense element arising from this transaction is included in financing. Any other income or expenses related to liabilities is included in the operating section. Okay, now, okay, this is the first thing. Now, we are going to for one thing added. Again, we are going to cover this in the chapter 12. We are going to cover it with respect to IFRS 9. Financial instruments. It should be noted that IFRS 18 sets are more detailed rules to classify. We are talking about the derivatives and hedging instruments. Don't worry about this right now. We'll cover in IFRS 9, chapter 12. Okay. Is it? No. Here we are talking about the, again, foreign exchange differences. Okay. Foreign exchange differences. It is going to be IS 21. Okay. IS 21. Check. What is IS 21?
Okay, 1 minute.
Yes. IS 21 foreign exchange. Is it? Foreign exchange. I think somewhere it is in chapter 7 or chapter 8. Okay. Chapter 8 or chapter 7 or.
Yes.
The foreign exchange gain and losses should see. Foreign exchange gain and losses should be identified in the same category with respect to income expenses. Is there any gain or losses, any exchange gain or losses on foreign currency where we have to include it in the operating section? Very clearly, there is no plus, there is no minus, okay? There is no plus and no minus as such. IFRS only sets how to classify the exchange gains and losses. Means any exchange...
Doctor, I have a question.
Yeah.
There is I remember in audit and assurance, after each chapter, there is what we call it, a test your understanding. Is it the same in SBR? Do you have test your understanding after each chapter?
Yes.
Okay, then.
Is it? I'm using the Kaplan only, and Kaplan is very students friendly.
Because I'm thinking how the question will be and how I am going to answer to the question.
Yes, sabr. Wait.
Inshallah.
Wait. Still, till I we didn't complete chapter 4 and 5. You will not have any. You will have some idea. Okay, you will have some idea. Okay. Now, so we have the same. We are talking about the. See, previously what we have done. I always make it a point. Previously, we have done profit before interest and tax, profit before tax, then profit after tax. Okay, like that we have done. Here, what they say, operating profit or loss, profit or loss before financing and income taxes, profit and loss for the year. Like this, there is a classification. They will not ask you this. Keep it in mind. I am putting it on record. They will not ask you this, but this is the new way of presentation as per IFRS 18. Okay, they will not ask you this, but this is the new way of presentation. What is they see the thing? Now they have added the thing. This is all related to operating. Same thing is there. There is no change. Don't say that we have any change. You have the same gross profit is there. You have all expenses are there. you have operating expenses. Okay, you have the operating expense. The process, the structure is same. Then you have separately, you have an investing section, you have the financing section. Okay, you have the investing section, you have the anything, we are talking about the interest expenses on borrowing, interest expenses on pension liabilities will come. Then we will have profit. Here what we are doing, we are talking about profit before income and income taxes. Profit from the continuing operations. This is the basic thing. Then you will say what is the loss from discontinued operation, and you have, then we will talk about this, we will cover somewhere in chapter 18. Okay, chapter 18 and 19 when you are talking in terms of consolidation. Okay, when we are talking about the console rules, we have to be very. See, I will tell you again. Keep it in mind. Even you are doing test, your understanding very clearly. Don't. I will not mislead the thing. 80% is the writing part. 30% is the calculation part. I am putting it a little bit more on calculation. I can say it is 20% is calculation. 80% is the writing. What is the writing part? Don't get confused. Whatever you are doing calculations, we have to explain those things. Most of the questions will be discussed. Most of the questions will be explained. Most of the questions will be discussed, explained, and fine. Okay, we will have like this. Okay, discuss the calculations, explain the calculations. That means you have to do the calculation and you have to mention step by step. Step by step you have to mention. An entity must present additional, we have to make additional subtotals. Okay, I'm just little bit quickly here. It should be consistent from year to the 1 year to the next year, and there should be more prominence than the totals and subtotals. Means you have to be very clear about the total, so that why we are doing this, people, the shareholders can make the judgment is used to determine if it is useful summary is provided. Okay, so useful summary is provided. See, likewise, just now you have asked me, okay, just now you have asked me. Here it is the statement, okay, here it is the, I am not doing this, keep it in mind, I am not going to do, I will just explain you this. Okay, they are talking about the, first you see what is the requirement, what they are asking. That they are giving you so many different things, okay. They are talking about the included in the operating expenses is the expense related to this one additional information. What they see the thing, just now I told you, discuss, this is the way it will happen. Discuss whether the ANG's profit and loss is presented as per IFRS 18 or not. You have to tell whether it is yes or it is no. Just now I told you, this is the basic format. People have a very misconception that it is a calculation subject, calculations will be there. No. The second question we are doing, they say discuss. You should be very clear. You discuss means you have every right. You have the space with you to make a good presentation. Now, when the most important thing is you have to attempt all the questions. This is the primary task. Make it a point. Time management and completion of the question paper is very, very important. I can trust, I have confidence in my students that they no doubt on my students' capability of knowledge. I don't have, but only thing is you have to finish all the questions and you have to manage the time. All the questions. Discuss whether ANG's profit and loss account is as per the IFRS 9. Now, what they have said, they have mentioned here, they have mentioned that it is the operating profit, it is profit before income and tax, profit before the income taxes, and profit for the year. What is the format they have mentioned? They have given a simple format. Is it right? They put the simple format. Now, is it right? Read this one. Inc. as a fusion retailer who sell goods through chain of 10 stores located in the prime city center locations, where online also, physical as well as online. In September 2008, in a bid to improve overall performance of the stores, 3 of the worst performing units were closed, discontinued operations. As per IFRS 5. As a result, Inc. incur lease termination penalties. If there is a lease termination penalties, it will be in the financing section. And disposable costs related to the asset. That these expenses have been correctly recognized as per IFRS accounting. Inc. controller have drafted the profit and loss account for the year ended. Has limited experience applying IFRS 18. She is unsure whether she has included sufficient detail on the face of the statement of profit and loss account, whether the store closure costs are correctly presented as per IFRS 18. Read 1, 2, 3.
Okay, sir. Okay, sir.
Okay, now you see the thing. You have to mention whether it is right. Here in the operating section, okay, in the operating section, what is there? They have done rightly, okay, they have done right. This is also got, okay, this is also okay. Selling and distribution is there. General and administration. Now, there is other operating expenses. Is it right or wrong? We have to tell. Other operating expenses, note 1. In the note 1, what they say in the included in other operating expenses, expenses related to provision. Is it? No. The provision relates to the legal claim of the employee made in January 1st. The claim is expected to settle in 12 months. The provision was recorded at present value at the start of the year and the following amounts recorded. How much is the, it is how much? 153. Unwinding of discount is 15 and closing provision is 168. Both the expenses related to initial recognition of the provision and the unwinding discount has been included. Should we include unwinding discount? Yes or no? Now, okay, now what we have to refer this table, okay, we have to refer this table where we are talking about
I think it should be financing, if I'm not mistaken.
Is it no, it is
provision.
Yeah, it is unwinding of discount on provisions where we have to show in the finance. Are you understanding now? In his
And what about the provision? I think it should be financing as well, right?
Yes.
Okay.
Is it? It should be where you have to include it. It should be included in where? It should be included in the financing section. Okay. Now it is a financial, is it? It is a financing element. Okay. It should not be issued there. Are you clear about how much is there? How much? Again, if you take into consideration, is that how much is the recognized provision recognized is how much? Provision recognized is how much? 153. Unwinding of the discount is how much? Unwinding of the discount is how much? It is 15. Provision recognized. If it is a provision recognized, again, you have to show in where you have to show is in the operating section. This you have to show in the financing section. These are other operating expenses. Keep it in mind. See the thing. What is given here?
So the provision, so doctor, the provision should be in operating, but financing.
Yes. Okay. The provision should be in operating, but not in the finance. Okay. Unwinding of the provision. See, provision is once we have it has been recognized. Okay. It has been recognized. Now you should be very clear when you are doing this. Is that we have to, when we are doing this, what we have to do? We have to make sure. How much is that? 153. Should be in where? There is right. 143, they have done right. There is no problem is there. Is that they have done 153 is right. Oh, this is in the operating section. Is that this is in the operating section. Whereas only the 15, okay, only the $15 should be in where? $16 will be in the financing section. This is the right, okay, already it has been included. It has 153 is part of 168. Are you clear about this?
Yes, doctor.
Okay. Next. What is the interest income? See note 2. Okay. Now you are understanding interest in note 2. Interest income has been earned from investment in bonds. When it is investment in bonds, where we have to show it?
Investment section.
In the investing section. Is it in the investing section? Okay. Now, what they say other expenses. Is there other expenses? What are the other expenses are there? Included lease termination penalties, disposal costs and some closure, other expenses as a separate cost line is deemed to be material. She has presented the expenses below operating profit on a basis that non-recurring and not related to day-to-day trading. Can we do that?
I did not understand.
Even included the lease termination penalties. What is there? They have mentioned anything about this other expenses. 39 is there. Other expenses is 39. They have not given the division for that. Okay, they have not given. They have given other expenses are how much? Other expenses are 39. In this, everything included the lease termination penalties, disposable costs, store closure costs, other expenses as a separate cost line, as she deemed them to be material. She has presented the expenses below operating profit on the basis that they are not recurring and are not related to day-to-day trading. Can we put all the things under one? How much is there? See the thing. If you take into consideration, it is 39,000. Okay, it is 39,000. Okay, it is 39,000. We are not going to calculate materiality at all. Understand my point? Don't say never.
Sorry to interrupt you. So she claims that this 39 is not material. That's why
Is that we have to mention? Is it lease termination penalties? Is how much? Okay, we have to mention what is the disposal cost. We cannot never. Is it that we should mention? Is there any other? Then you have to say any other expenses. Any other expenses is one-time expenses. But these are very specific. These are specific ones. When you're talking about disposable cost, whatever disposable cost from the store closure is a store closure. We should not put it in one item. That is what they say. We made it very clear. There should be some subtotals and there should be some totals. Is that we are putting it in aggregation? Is that we are putting it in aggregation? What we have to do? We have to avoid this type of situation. Okay, we have to see this is where IFRS 18 comes into play, which we should avoid so that it will be easy for the users to understand. That it will be easy for the users to understand what is the lease termination penalties. It comes in lease termination penalties comes in IFRS 16. Disposable cost comes in IFRS 5. Other expenses, okay, fine. Okay, but we cannot, what we are doing if we are going to show like this, we are mixing up the things and we are giving a wrong message to the shareholders.
Yeah, I have an example here. When we are assessing the, what you call it, the income for certain clients, some of the employers, they are mentioning other allowances. Other allowances, we don't know what is exactly inside this allowances. So we cannot make a proper assessment of their income. We are bring up on.
Yes.
I think so, yeah.
Is it right? Are you clear about this?
Yes.
You understand, to understand the theory, I am very much particular. You will have a very, very different opinion that why doctor is saying like this. I'm telling you very clearly. Understand the theory. This is a separate game. Very simple. It is a separate game. It is not like we should think logically. The moment you say discuss, you should have a good language. Develop the language of financial reporting, SBR language, and you have to mention that what is the answer if you want to write the answer. I will tell you that the expenses related to the you have to write in simple, easy words. The expenses related to the provision with respect to unwinding of discount should be shown in the financing section. What the directors have done is not correct. There is nothing that you should not mention. Mention whether it is correct or not correct. The provision recognized should be shown in the operating section, whereas the unwinding of discount should be in the financing section. Very clear. Second point, interest earned from interest. This is what interest income has been earned from investments. This has to be shown in the investing section of the statement of profit and loss. It should not be what they have done. It should not be shown as it is not been shown in the operating section. It should not be shown in the operating section. Elvin has included the third point by point. You have to respond point by point. Elvin has shown the other expenses, which includes lease termination penalties, closure cost, where we have to show closure cost and lease termination penalties. Here they have mentioned very clearly. Is that lease termination penalties? Where is that? Where there is that? Anywhere it has been mentioned. Closure cost. Somewhere we have done. Somewhere we have done. Interest on borrowings. Okay, no, it is not there. Means you should not show in the In the other expenses as such, we have to show it in a separately. It has to be segregated. It has to be segregated individually. Is it individually? Okay, individually, and have to be shown as a profit. Are you clear about this? See, and interest on borrowing, interest expenses on borrowing, interest expenses on the borrowing should be shown in where? Should be shown in the financing activities. Are you clear about this? Likewise, you have to respond the question asked. Then we have to show. That is why we are saying we are there to discuss. It is we are going to say that it is no. See, you take the structure, is it that I will build you a mindset, how we have to approach. The moment you say question, in the question they will ask, and it is very much clear that they have done something wrong, we have to do correct. It is very much clear from our understanding. We have to make corrections. Keep it in mind. If this is the mindset you should have, that they have done something wrong, you have to make correction. Every question will have like this only. Are you clear about this?
Yes, doctor.
Now, when you are talking about the operating expenses, fine, we have done this. Is that the only thing is you are refreshing our knowledge, as simple as that. IFRS presentation disclosures can either classify present operating expenses. What is the function of the expenses? What is the nature? Or it is a combination of function and nature. Okay. What is the function? Function means whether it is selling and distribution, whether it is administration, whether it is cost of sales. That is the function. Okay. Nature means how it is going to be identified. Now, when you do the things, okay, they are giving you presenting by the function. If you say by function, okay, it is by function. We are talking about sales. We are talking about selling expenses. This is a by function. Okay, goodwill impairment, operating expenses. Other heading description can be used providing the report is structured and useful, such as distribution cost, administration expenses. Do the thing. This is only for our understanding. I'm telling you again and again. You didn't find anything. It's only our knowledge. It will increase our knowledge. A refresher is that it is either by the function, if it is by the nature. Okay, if it is by the nature. What is the nature? We are talking about the changes in inventories, raw materials, employee benefits, depreciation. These are the same usually in the old format. We will say depreciation, amortization, and impairment. What we have done in your bachelor's is that employee benefits, salaries we will put, other operating expenses. We will calculate other. Now we are not doing anything. You will not find anything depreciation here anyway. Now you will find it very strange. Is that depreciation is now now it has been included in cost of sales, but not in the operating expenses. They will say depreciation. If there is anything in there, they will say that 60% is cost of sales, 20% is for the administration, okay, and something 20% for the selling. This is the change which you are understanding with respect to the by the nature and by the function. Now we are doing by function. We are not doing by nature. That's also very clear. That is also very clear. We are following by function. We are not following by nature. Are you clear about this? Okay. Now there is a mixed presentation. Is that people are there? Mixed presentation may provide most useful structured summary for entities. If example, when a mixed presentation is beneficial, it has two varying types of main businesses activities, different presentation methods. Don't get confused, okay? Which provide the most useful structured summary. Now, what people are doing? People are presenting with respect to impairment expenses. Some operating expenses is entity but some expenses that are difficult to allocate to functions. Impairment, where we have to show impairment expenses, we will have some difficulty. Then we will see what is the best alternative. Choosing a presentation method, entity can should select the classification. It is up to you. Your option is yours. Is that as per IFRS 18, there are number of factors may consider when determining which presentation method should provide. It is at your discretion. Nobody will question you that what you have to do, what you should not do. You will see what are the main drivers of profitability, which will influence the profitability, whether it is sometimes manufacturing companies, sometimes you are working in manufacturing companies, if you are working in manufacturing companies, then nature will be more important. If you are working with the service industries, then function is very important. How the business is managed, how it is reported internally, and whether the allocation of some expenses is arbitrary. Is that just for your say one-time reading? I'm telling you, one-time reading. This is not we are going to use.
Doctor,
Yes.
this is not going to be tested in the exam.
No way.
No.
Only thing that I made it very clear. What is going to be tested? What is going to be tested? It is to be tested this one. This is important. Okay. These are where I am putting the star. Is that this is going to be tested. Okay. But why we are going through this is if you have this, you will have very clear in your mind. Yes, you know that where you have to focus, where you should not focus. Okay, where you should focus. Now, what is there? You will have another one. I have provided the following. This is very important. OCI, where we have to show whether we have to show in the profit and loss account, where we have to show in the OCI. That is very more clear. We have to the second part. Wherever I am putting stars, keep it in mind. Those are going to be tested. Is it 100% tested? I'm telling you this. Okay, we have to show whether it should be in the profit and loss account. If it is profit and loss account, investing section, operating section, and financing section, or it should be. There is no classification here in OCI. Okay, there is no classification is there. Once OCI means OCI. Alas, you will not have no plus, no minus. Okay, OCI is fine. Now if we are putting both the things, it will become TCI. We are not going to worry about this also. Okay, is that we are not. Now, what is the conceptual framework and inclusion in OCI? Wherever you want to stop, tell me, I will stop. The conceptual framework states that statement of profit and loss account is the primary source of information. That is the primary source. That is the more activity from where we are generating revenue. Income expenses should normally recognize in the profit and loss account. Developing standard, they say that board knows that it might decide certain expenses should be present in OCI. If resulting from which expenses we show in OCI, resulting from remeasuring an item to the current value. If you are remeasuring, okay, if you are remeasuring, we will cover this. If anything we are remeasuring, it will be shown in the OCI. Any profit or loss which has been incurred in remeasuring in OCI, the accounting treatment provided is a faithful representation. Anything what we do, if we are remeasuring as per the fair value, is it? If we are remeasuring as per the fair value, then what will happen? Either they will be plus or minus. This is not a normal trading activity. This is not that. This is the something which is land and building. We are talking about any foreign exchange devaluation is different. Land and buildings is different. Anything long term, okay, anything with respect to long term, then it has to be shown separately in the OCI. That is the most important thing. When we have to show it to OCI and when there is a reclassification, classification and reclassification. That little bit you have to more careful. They mentioned very clearly in OCI there are two groups are there. There are two classifications. The items we see that is some items will be reclassified to where reclassified to profit and to be, we will write this again and again. Is it that what are the things that can be reclassified? Any gains reclassified to profit and loss account. See what will happen. Keep it in mind. You will have a foreign exchange gain. Okay, foreign exchange gain. What you will do? You will show it in the OCI. And after some time, what will happen? There will be again 2022, 2023. There is one year there is a gain, 1 year there is a loss. Then what will happen? You can move around. Okay, you can move around between OCI and profit and loss account. This is called as a reclassification. Whereas what other things are there? You can do it with respect to foreign exchange. You can do with respect to any cash flow hedging instrument, or you use anything with respect to investment in debt instrument. Only these three things can be reclassified. Okay, which is not going to be reclassified. Anything which is IAS 16, IAS 38, property, plant and equipment, intangible assets will not be reclassified. Remember this. I am not only putting a star mark, I am highlighting with this. This is the most important. Is it? Okay. IAS 16, they cannot be reclassified. Any revaluations of remeasure government components of defined benefit plans cannot be reclassified. Remeasurement of investment in equity, once it cannot be, means once it has been done to OCI, it has to be settled down. Khalas. There is only one way. Okay, there is only one way. Okay, there is only one way. Is that if you are talking about statement of profit and loss account, straight away statement of changes in equity. Khalas. We have to settle down. Here what will happen? There will be movement will be there. Plus once I can go, we can come. Is that very technical point? Okay, keep notes in and write down reclassification page number. Okay, very which are going to be reclassified, which are not. In sometimes I am telling you very clearly that during the process you will have more knowledge than me. Even I am talking about the thing. According to the conceptual framework, income expenditure including in OCI should be reclassified to profit and loss. When doing so, results in profit and loss account provides more relevant information. Means we have to know which one has to be done, which should not be reclassification. Okay. Now, IFRS 18 requires attitude to either present statement of financial performance entity to either present in the statement of financial performance, or you have to disclose in the notes. Income tax relating to each component of OCI. Okay, disclosing each component of OCI net. What is the tax effect? Okay, because when you are doing this, it will have impact on the other components of taxes. I am not going to do anything. I will cover this with respect when we are going to cover IAS 12. Okay, IAS 12. Disclosing OCI before related tax effects with one amount shown separately. Means what will happen if we are doing this one time we have to classify, one time we should not classify. Definitely it will mislead with respect to the tax component. In order to be very careful to the tax component, we have to be very specific which items to be classified and which items to be not classified. Then entities can prepare one combined statement for the year, or they can prepare separately. That's okay. Okay, that's okay. Okay. Again, just this is the format. We are not using the format. I am telling you very clearly. Where we are doing, where we are not doing, this is not there at all in any of our exam kit. Okay, they are talking about the complex format. Is that income expenses that will not be. You have what is more important. We have to make more income expenses that will not be reclassified. Is that total income expenses that not will be reclassified. and subsequently that will be reclassified. Okay, we only we want this in writing. Okay, which is going to be reclassified or which is not going to be reclassified. And ultimately, what will happen? We are going to work out with that. Means when we have the profit, this is very unique. But make it a point. It is not going to be assessed in the examination, but in practical terms, from next year onwards, you are going to prepare the statement of profit and loss account in this format only. Okay, this format only. This is as per IFRS 18. Now, reclassification adjustment. I will take 5 minutes, then I will stop. Reclassification or amount to recycle. So see what is I told you, either it will go up or it will come down. Okay, it will come. IFRS that reclassification are either presented on the face of the statement of OCI or disclosed in the note. Either you can show it in the on the state OCI, or you have the option to disclose it in the notes. And definitely people are there who will criticize. Many users ignore OCI. They don't have the awareness about what is the OCI. Okay, people doesn't have the OCI. Since what is the criticism? People doesn't have the concept of OCI. They are not related to that. They think that this is not related to the trading cash flow. As a result, material expenses in OCI may not be given attention. Even the amount is material, people will not give importance to that. Reclassification from OCI to profit and loss account. In profit and losses being recorded negative. Today we are in the year 2026 we do this. In the 2027 what we do, you reclassify. Then what will happen? 1 year you are transferring to profit and loss account, another year you are not transferring. Again what will happen? It will have a misleading. Okay, it will record in different periods from the change in the related assets. This is not that much going to be that much advisable. Are you clear about this?
Yes, sir.
Okay, 1 second. No. Okay, it will take time.
Tomorrow?
Yes. Okay, tomorrow we'll complete